Hi, I'm Jill Brotman with That Properties. Thank you so much for tuning in today. I'm speaking today with Ben Cohen, Managing Director at Guaranteed Rate. Ben's been in the biz for 16 plus years. He's based out of Chicago and he can lend in all 50 states. Ben's phone number is 773-654-2055 and Ben can be emailed directly at ben@rate.com. Ben, thank you so much for joining me.
You're welcome. Thanks for having me.
So we're going to fly through a couple questions here. This is just such a hot topic right now, and I know that you are so extremely busy. So thank you so much for sharing a little bit of your day with me.
You're welcome.
Let's see. How has the lending market changed during the COVID-19 pandemic?
Oh, that's a loaded question. I don't think it's really changed too much other than the fact that there's just more checks and balances put in place, right? Like at the end of the day, we need to make sure before we close a mortgage, and I as a lender and we as an organization have a fiduciary responsibility to make sure that we're putting somebody in a position where they're going to be successful and not fail. So more than ever, we are grilling people a little bit more on, their job situation, their income situation. Do they see any changes down the line with their job and their salaries, or reductions in their salaries, or are they going to be put on leave? So at the end of the day, I don't think it's changed that dramatically. There's a little bit of pressure on jumbo mortgages with sometimes they require more down payments and whatnot. So you've seen that in the jumbo space, but on the conventional side, which is what most people do, there's really no change. One of the things that we're doing is we now need a pay stub when you are 2 weeks out from closing. So if you're closing on June 26th, as an example, we will need your 6/15 pay stub to validate that your income hasn't been reduced, that you are still employed. And then we are also going to call the employer the day before closing, which we've always done, to obviously still validate that information as well. So a little bit more checks and balances.
Okay. Do you see the mortgage industry taking the lead of the car industry with longer term loans?
No.
Okay. And is your phone still ringing off the hook with refi?
Yes.
All right. And
how about these one-word answers, huh?
They're great. We're going to make it through a lot of questions. Thank you. So what's the best answer that I can provide people with when I get a phone call and somebody says to me, what's the rate for a refi today? What do you think? Besides telling them to call you.
I don't think you should ever quote an interest rate for somebody because you don't know anything about them and it's not what your profession is. Just like when somebody calls me and asks me about an interest rate, me telling somebody a 3% interest rate without knowing anything about them is just irresponsible of me, right? But at the end of the day, that's all a consumer understands is what's my rate. Well, there's way more that goes into it. It's credit driven, it's price point driven, it's down payment driven, it's property type driven. So there's several different factors. So at the end of the day, you shouldn't talk about that. I don't talk about that. I'll give somebody a benchmark, but it's like I tell everybody at the end of the day, me telling you a mortgage rate is 3% when I don't know if you qualify for it does neither one of us any good. So, it's like going to I use the analogy. It's like going to the doctor and saying, I've got strep throat, but I don't want you to swab me. Just give me the medicine. It's the same concept.
Yep. Okay, great. Thank you. Have you seen a change in the amount of applications, Ben?
It's really, really busy, both on the purchase and the refinance side. So yes, we are up almost 100% where we were last year.
Amazing. That is so interesting for me to hear too, because, we're getting a late start on the market in terms of selling. And, the buyers that I'm working with they just don't have that much to choose from, but I'm really happy to hear that you.
Yeah. Well, inventories are low right now, right? So, when obviously we all understand supply and demand. So at the end of the day, when the supply is low, the demand is higher and there's multiple offers on lots of homes. So I think sellers are, you would know more than I do because I just deal on the financing side, but I hear about it a lot. At the end of the day, there are people that need to be aggressive. They need a quick close. They want an appraisal turned around in 2 days. So it's really busy, and I think it's just due to inventory levels. But everything I hear, you're going to start seeing some more homes come on the market, because I think sellers are realizing this is actually a pretty good time to sell, contrary to what, Fox or CNN say on a daily basis. So
Yeah. We've got, there's new stuff coming on all day, all night. Market's really starting to pick up on the selling end. Let's see, what else can I ask you here? What are the biggest challenges besides employment changing that buyers are facing today with loans?
What are the ask me that one more time. What are the
Okay.
biggest challenges? What?
What are the biggest challenges buyers are facing closing on loans today?
I don't know how to answer that. I don't think there's really many challenges, quite
Okay.
honestly.
Okay.
Some of the stuff, because of COVID and how sensitive people are to going into a title company, we're doing a lot of things electronically and whatnot. So at the end of the day, maybe the process is changing. Attorneys aren't typically going to closings. They're doing it via Zoom or FaceTime. So borrowers are kind of going to the closing unrepresented without physically sitting next to their attorney. But for the most part, I don't really see any shift.